Here are 5 things that people think can affect their credit score, but really have no effect to their score at all. So I'm going to be breaking that down here now and explaining to you what the thought process is behind it. What's up, y'all? My name is Tomy Boboy, your credit and personal finance coach. If this is your first time on my channel, I'd just like to say welcome. Typically on this channel, I'm talking about things related to credit and personal finance. So if you're interested in achieving financial freedom and improving your credit, then be sure you hit the subscribe button down below so you don't miss any of my future videos. Now let's jump into the 5 factors that don't impact your credit score. The first factor is just checking your credit report. A lot of people make the mistake of thinking that if they pull up their credit report, or if certain people pull up their credit report, then it can have a negative effect on them. Okay, now it really depends on how it's being done, but anytime that you specifically are pulling up your credit report, whether it's you're pulling it yourself through a website like annualcreditreport.com, which is where I typically recommend, or you're using any type of credit monitoring app, which is pulling your credit report, those have no impact whatsoever on your actual score itself. So I typically tell people you can pull your score as much as you need to, or pull your credit report as much as you need to, especially if you're in a situation where you think that there's identity theft going on or anything like that and you want to constantly monitor it, then that's a fine route to go. But they do show up on your credit report but have no impact on your score because they're considered what's called a soft inquiry. So something that only you can see but no lenders or nobody else can see. Now, quite honestly, when it comes to inquiries themselves, I typically tell people don't worry about the inquiries, especially whenever you're just working on building your credit, because one, inquiries only impact 10% of your score. Okay, so out of every single different category that you have, this is going to be the smallest category available. Okay, so you don't really have to worry too much about inquiries. I just would say don't get reckless and apply for a ton of different types of credit all at once, because that's when other creditors will see that and they'll just reject you right off of the bat. Now, if you are trying to fix your credit, then I actually have shot a video teaching you how to fix your credit step by step. I'll actually link that video down below for you to be able to check it out, and you can know exactly what route to take. That way you can get into the 700 club as fast as possible. Okay, so that video is going to be linked down in the description, as well as I'll try to put a card up somewhere on this video so you can click on it to get to that video. But another great thing about getting your credit checked is a lot of places nowadays will do the soft pull, right? So if you hear places that say, they say apply for credit here won't impact your credit score. Typically what they're doing is they're doing a soft pull. So only they're going to be able to get your credit report and see what it is. But they won't have to actually pull your credit as a hard inquiry until you decide to move forward with them. Okay, so I think this is great, especially for I've seen it for quite a few things. Like I've seen it for student loan refinancing. Obviously, you're going to have the credit monitoring sites, but there's even some credit card companies that are starting to do the same thing. Okay, they do the soft pull and then they tell you what's your chance of getting approved. And if you decide to move forward, then that's whenever they do an actual hard inquiry on your credit. Now, number 2, the second factor that doesn't impact your credit score is going to be things like credit counseling. So if you've ever actually sat down with a credit counselor, maybe you guys have talked about what steps you should take when it comes to improving your credit. Typically, they would have pulled your credit, right? And they're looking at your information and telling you what advice to take. Just by you talking to a credit counselor, that it will in no way impact your credit score. Okay, so what could impact your credit score is if you take action on what they're telling you to do. Okay, typically they're going to give you some sort of game plan and say, hey, follow these steps and you can be able to improve your score by doing this. Okay, so obviously I can't tell you whether it's going to help you or not, because it's a credit counselor. I don't know what advice they're giving you, but it can typically it's supposed to have a positive impact, right? Because they're supposed to be knowledgeable about credit and telling you exactly what to do to improve your credit. Okay, so in that case, when you're following their advice, yes, it's going to impact your score, but just talking to them or going to a credit counselor to talk to them isn't going to have an impact when it comes to your credit score. Number 3 is going to be your income. Okay, a lot of people think that depending on your income, that's going to have an effect on your credit score, and that's not really the case. There's nowhere on your credit report that calculates or keeps track of your income and uses it to calculate what your credit score is going to be. Really, where the impact comes is when it comes to paying the bills. Okay, because then you can have some trouble. Like for example, if you have a lower income, it might be a lot tougher for you to pay certain bills depending on what kind of situation you're at. But one caveat I have to that is I have seen people who made a pretty good income you can say a great income, right? They're making a lot more than the average person here in America. And they were still having credit issues. They still have bad credit. The reason being is, don't think just because you have income, let's say you get to $100,000, $200,000 a year, that all of a sudden all your credit problems are going to be solved. Because if you're in a situation where you're using a lot of credit cards, or you have a bunch of different credit accounts opened up, right? You have like an auto loan, a home loan, then you have like 5 credit cards, you bought a boat, things like that. You know, once you make more income, it's highly likely that you're going to find more ways to use the money, the higher income that you have, right? So you might still be in a situation where you don't have great credit because you might still be living a lifestyle higher than whatever your income is. Okay. I've seen it happen with a lot of people. So, I don't want to ever say that, that just because you have a low income, it means you're going to have a bad credit score. Because you have a high income, you're going to have a good credit score. It really comes down to how you are personally and how you're dealing with your personal finances. Okay. So, income has nothing to do with your credit score. It has no impact on your credit score. It really is. I think it comes down to your mentality with money and what you're doing with that money that you have. Number 4, the fourth one's going to be age. Now, this one's a bit of a tricky one, right? So, your age is never used in your age just shows up in your credit report just because of your date of birth, but it's never used to calculate your credit score. Now, where the issue comes with this is that your age of accounts do show up on your credit score. Okay, so there's a little bit of a twist there. Now, your age of accounts, that category of your score, which is one of 5 categories used to calculate your credit score, that category only accounts for 15% of your score. So in the grand scheme of things, it's not that big of a category. Now, I typically tell people don't focus on that category. Don't worry too much about it because it's a lot harder to impact that, right? With the credit utilization category, which just deals with how much of how much debt you have on your credit cards, you could impact that category a lot easier because if you pay down your credit cards, then that part of your score goes up. Or there's a payment history category where if you just dispute any negative accounts and get them removed, then that part of your score goes up. But with this category, the length of credit, it's a lot harder because it just only time will improve this part of your score. Because as the age of your credit accounts get longer, or are open for longer, then your score is going to continue to improve. Now, what I typically tell people is you focus on the first 2 categories I mentioned, right? The credit utilization and the credit history. Now, the reason being is because when it comes to your FICO credit score, there's a range that you can achieve, right? You can the lowest you can have is a 300. The highest you can have in terms of the credit score is an 850. Okay. So if you do the math on that, you see that you have about 550 points in the middle. Right? So you can drop down from 300, or if you have all 550 points, you're going to have an 850 for a credit score. So what that means is those main 2 categories, the payment history, which is 35%, and the credit utilization, which is 30%, those 2 categories make up 65% of your score. So if you were able to do those 2 categories perfectly, right? And obviously, let's just say in a scenario where you can make these 2 sections perfect, then that would give you 357 points that you would get for those 2 sections, which would make your score a 658 or 657.5 in terms of your credit score. That means you're literally only about 40 points away from the 700 club just by you focusing on those 2 sections or those 2 categories. That means those 2 categories only accounted for a total of what? 65% of available points. So you still have another 35% that's there. So if you can just get about 40 points from the other 35% of your score available, then you're going to be able to reach the 700s quite easily. So if you look at it that way, then it makes it a lot easier for you to be able to achieve a 700 score. Now, if you want to learn more about that method and how to go about dealing with that, again, check out my video on how to be able to fix your credit step by step. In that video, I break down why I only focus on those 2 sections and how you can be able to have the best success in terms of being able to eliminate any issues that you have in those 2 categories and be able to achieve a 700 credit score. Now, number 5 is insurance payments. Okay, a lot of people think that your insurance payments can affect your credit score, but the funny thing is it's actually vice versa, right? It's the opposite. A lot of people don't know that all these insurance companies, they pull your credit to decide how much they should charge you. So they decide how much your premiums are. The way they think of it in their mind is, if you are financially responsible, it's highly likely that you're going to be responsible with your vehicle, your home, whatever it is as well, right? So what they'll do is they'll look at how your credit score is. And if you have a low credit score, then they're probably going to charge you more in terms of premium. Okay. But if you have a higher credit score, then they might lower that premium a bit and give you a better rate. Okay. So that's why I typically recommend, if you're in a situation where you are, you are improving your credit score and you have improved your credit, then you might want to go and see what kind of rates you're getting with any different types of insurance companies, because they're probably going to give you better rates once they see that your credit has improved. Another reason that insurance payments don't affect your credit score is because, if you think about it, you are paying in advance for the services that you're going to get, right? So if you pay on the first of the month, you've paid for the services you're going to receive on that for that month, right? Or if you pay for 6 months of services, once you pay, that's when those 6 months start. So in that situation, if you stop paying, they just stop insuring your vehicle, your house, whatever it is. Okay. So there's really no reason for them to ever put anything on your credit, because you are prepaying for everything. So the way I like to think of it is, insurance payments don't affect your credit score, but your credit score affects your insurance payments. Okay. So you always want to make sure that you are improving your credit score, because not just can you get great rates on loans, great rates on mortgages, be able to get approved for any credit cards, but you're also going to be able to get great rates when it comes to your insurance as well. Okay. So it's things like that a lot of people don't think of, that I think is really beneficial and really can help you when it comes to managing your finances. Anyways, guys, that's going to be it for this video. Those are the 5 factors that do not have an effect on your credit score. So I hope that at least you were able to find 1 or 2 that you didn't know of, that you can take advantage of to be able to make sure that you're not thinking those are the ones that are impacting your score. Okay. So that's going to be pretty much it for this video, guys. If you need help on improving your credit score or improving your credit at all, then I have shot plenty of videos that have to do with how to remove hard inquiries, how to remove any type of late payments, how to remove collections accounts, medical collections, repos, bankruptcies, you name it. And what I'll do is I'll link those videos down below so you can check out those videos to be able to continue improving your credit score. Okay, so that's gonna be it for this video, guys. Be sure you hit a like button so we can get this video out to more people, as well as make sure you hit the subscribe button down below so you don't miss any of my future videos. Okay, so that's gonna be it for this video, guys. I'll see you at the next one.